Can technology reduce aging? Can we 3D print our food? Can drones replace cars? If you're interested in frontier technology, you must watch my conversation with Jenny Lee.
For me, the world is one map.
We came to Riyadh, Saudi Arabia to meet with Jenny, where she's building bridges between Asia and the Middle East. She's one of the world's leading venture capitalists, and her firm is known for taking bets on companies that want to take sci-fi and turn them into reality.
With AI, the time to discovery has shortened.
Her firm predicted the rise of TikTok, and her firm now has about 50 unicorns in its portfolio. I see a lot of investors in my work supporting startups and founders, and Jenny is special. She chases down risk. She moved to China over 20 years ago and was one of the first VCs in the country. Since then, she's faced a ton of obstacles along the way, even an actual bear. So Jenny, is it true that on a camping trip to Eastern Russia, you came face to face with a bear, and your first instinct was to go towards the bear? What does that say about your appetite for risk?
You guys have done your homework. You definitely have. Like, I was so excited to look at the bears who were like 2 meters in front of me. All I wanted to do was take pictures. And so I ran towards the bear. My husband was like, "Oh my God," he's trying to pull me back. So this is Kamchatka, which is wild. And the bears are roaming wild. There's no fresh water. There's no camping. Essentially, you just like sleep in the ranger's lodge, and so it's really back to nature. And so it's what I like to do. You know, just go back and remind myself that beyond capital, beyond the world that we are, right, the cities, there's a real world out there.
Your team told us that you still religiously take a few weeks off each year, and go off grid completely into the wilderness.
So I think at the base, what I like to do, you know, I like to tell my little kid that the world is dying, right? Okay, I'm very brutal. Like, I just tell her, please don't waste water, don't waste paper, you know, like the world is dying and we all need to do our part. And so I want to be able to see and enjoy Earth. And therefore the places that I go, typically in the early days, off-grid. Because I want to see the snow cape, like the snow when it's still there. I want to go look at the animals when they're still there. I want to feel that you know, like the grass, right, when it's still there. The last trip I did, I actually hiked the East Africa mountains.
Wow.
In the midst of summer. Because I don't plan my vacation. I just had some time. And I said, okay, I have a week. Where should I go? And so I look at the map and I said, I haven't been here. Let's go. And then I realized after I landed there that we were the only, I went with my husband, that we were the only 2 hikers because it was just too hot to be out in the mountains, right? But I think as an investor, you have to figure out your own risk profile. When I interview like newcomers into the industry, that's usually how I ask. You know, I'll ask people like, what's your risk profile? What do you do when you make investments? What do you do in your daily life? And I think from firsthand experience, when you're faced with danger, what do you do? And so, indeed, I guess that's my calling. I prefer to spend more time with animals, and I love computers and I love robots. So I guess that's my priority.
That's amazing.
And then people.
So, I mean, this kind of appetite for risk, right? You've been on the forefront of some of the trends early, whether it was, you know, the even next generation mobility or AI or health or, you know, robotics. Can you tell us a little bit about how you spot these types of these trends, and what's the next wave, let's say?
Okay, we shouldn't define this as throwing money at risky things. I think risk is it's about understanding risk, right? And so I think as an investor, as a VC, it's important to do visioning. You know, since young, I'm like a sci-fi fan or fantasy reader, you know, like I like to see where the world is going to be 10 years from now, 20 years from now, 50 years from now, 100 years from now. I think that the ability to imagine, it's actually very important. And not just one outcome, but various outcomes. And then what's important though as an investor is that we then have to bring that future back to the present and said, where is the technology? Where is the technology stack? Where is the technology in terms of the time to, you know, realize those core fundamental technology into a market facing product. I used to upgrade fighter jets. So I used to design products. I have a very systematic view of the world. I have a photographic memory. Like when I look at a design, a system program, I can just imagine how it's going to look like. And so I think in that sense, it does help when I'm looking at leveraging technology to create the next generation products. It's not 10 generations out, because to get to 10, you start with 1. Right? You want to know a 10, but the path to 10 may take various things, but you have to start with 1. And so it's really that balance of saying, how the world can look like, but then be realistic enough to say, okay, but I'm going from here to 1. And so then you have to find companies, find startups, find solutions that can actually get you to 1 first. That's kind of how I think. And so whether it's flying cars, whether it's like new products, like those new solutions, products allow me to then combine that imagining with what's possible today.
And you're invested in over about 300 companies, maybe almost 50 of those are unicorns. I mean, you have a track record in investing. I know that you invested in YY.
I'm like a gaming investor.
Yes,
I do all the cool stuff.
I would love to hear about, especially, I mean, you've talked about suspending disbelief, but then also verifying, right? Yeah. And really understanding, especially when it's something where you might not be as deep in yourself personally. In an environment, I mean, you were new to China,
right?
I mean, you took the risk and moved out there over 20 years ago.
Yeah, I'm the one that runs towards the bear.
you ran towards the bear. How do you make up for it in terms of like a good sense of that market? Let's take the gaming example or any other example you might, just to make it concrete.
Right. While I may not look like I'm a gamer, I'm not a gamer. But when you're upgrading fighter jets and you're doing simulation, the basis of technology behind simulation is gaming, right? And so 30 years ago, when I was designing like different flight scenarios and combat scenarios, that's gaming, right? And so I think number one, understanding the technology stack is important, which I do, right? And so I can tell you 30 years ago, I was playing with head-up display where you could control the flight of an aircraft with your eyeball. That's 30 years ago, right? Today we're still talking about AR, VR, and like this big, bulky glass. So I think number one, I'm quite fortunate. I was exposed to many of this technology in a real world setting where I get to design products, I get to understand the technology. The second aspect about gaming is that it is ultimately about human psychology. It's about what does it take to get Muhammad to pay for tokens for the game? What does it take to get you to keep going from level 1 to level 2, level 3, level 4, right? Yeah. And so that's the psychology of understanding like consumer, why they play games. And so the game design is closest. Games are the closest to understanding human psychology. And so for me, I do have the basic configuration and I understand. But when it comes to deal flow and when it comes to startup, there's no shortcut. So I spent over 3 years, and you are familiar with Asia. I was in the southern part of China, right? Yes. Shenzhen, yes. Guangzhou, where there was a lot of gaming startups, because Tencent's there, NetEase is there. And so what I did was I literally just spent like 3 years, going from a startup. And my first question was, who are the coolest developer right now? Who are the guys? Where are the guys? Where are the game developers? Like, what are they doing? So I want to know the people behind all the cool stuff. I spend time to understand what are they trying to develop. I look at the new games. So gaming by itself went from MMORPG, which are the large, massive, player games, to then browser games, mobile games, light casual games, mobile games, and then live streaming. So it's not unstructured. It's actually very structured. And so understanding how the games are, the people are, and then at the end, I'm like, so I always feel young because the gaming developers are like young. You can have a 15-year-old like coding. So I think that just being there and talking and asking people who's the coolest guy in the room. Mm-hmm. Not coolest guy in our world, we have no cool guys in the financial world. We're just a very serious people. But in entrepreneurship, with startups, with founders, there's always some cool guy, And so just going down and spending time, understanding what drives them. And so at the end of the day, when YY came about, I mean, just on this deal, all my partners thought I was nuts. They're like, Jenny, are you nuts? We don't do gaming. Like, we do gaming, you don't make money. And the CEO of the company went to our investment committee dressed in like flip-flops and shorts. He had no idea that when you go talk to investors, like you gotta at least put on, some shoes, right?
Just at least shoes.
At least shoes.
Yeah.
So it's very different generation. But I spent a whole week sitting next to him, watching him play. I don't have to play. I can watch him play.
Interesting. So you spent a week sitting next to the CEO of YY, watching him play the game.
That's right.
And you did this yourself. You didn't send an analyst.
No, I did it myself. You have to be.
Why?
Because that's how I like. Yeah, as an investor, the analyst cannot articulate this, right? Like in new areas, new innovation, we have to feel it.
Tell us about the feeling.
It's I don't know how to describe gut feel. It's like you just feel like the stars are aligned. Like there is something out there.
When was the last time you had that feeling?
All the time.
It's amazing. I want to be you.
You want to be me, right? So I love my job. I think that, yes, we make the bigger return from our later stage funds because that's when you write larger checks. But I think the importance of having early stage fund, the importance of always staying close to the new entrepreneurs that's coming on, it's very important. So I always appreciate the opportunity to speak to founders. First-time founders, I always spend time. It doesn't matter if I don't end up investing, but if I can just help to, create that right sense of passion and vision and help to guide them, then I probably have done good.
So GGV famously invested in Musical.ly that ended up getting acquired by ByteDance and becoming TikTok. Yeah. That's an amazing story in and of itself, but I think even doubly interesting is the decision to maintain actually and hold on to the equity, right? So to actually get exposure to what became, one of the amazing stories out of Asia. Mm-hmm. Can you just take us back to? I know that was led by the team, but I think that story is so interesting. And was there a view as to what Musical.ly could become, and how did they identify that?
Yeah, so this deal was led by my other partner. So at the firm, where along with how we made investment in YY, it is about what we call consumer internet. And so as part of consumer internet, we actually studied the behavior of consumers at from different age group, consumers from different region, different background, different countries, and what kind of content are they like consuming. So in that sense, we had invested in blogging companies when blogging first came out. So we went from text sharing, right, blogging, to then videos, online videos. We've invested in online videos, and then to like short form videos, right? And so when you follow the evolution of content consumed in different form, we always knew that there was room for different types of content of different length. And so Musical.ly was part of that, right? Was to say that they did, from an initial product and feature set perspective, was able to come out with a new way of interaction, with a new level of like different types of content, which is short form, created by the consumers. And that's also thanks to the fact that, I don't know if you know, like the world of sharing took off because the mobile smartphone started to have front-facing cameras. We studied the phone, and when you start to have front-facing cameras, you realize that it created an entire different use case. It's not about taking pictures of your friends, it's now about myself. Yeah. Right? And then the front-facing camera allows you to then do a lot more different use case. So at the firm, that's what we do. We are very thematic based, and then we follow the evolution, whether that end product is going to be for consumer or whether it's for enterprise. Yep. And so what we were not sure, obviously, is how do you monetize? Yeah. Right? Monetization for new consumer technology model, it's always very nuanced. The West has been very good at monetizing on traffic, right? You have Google, you have Meta. It's directed to allowing a lot of users don't pay, but advertisers pay. In the East though, it's always consumer pay. The startups in the East are very focused on who's going to pay. How do I get the consumer to pay? And so while they're all consumer technology company, the way the entrepreneurs, the products are designed has a very different endpoint. But when you think about it, is there room for both to learn? The answer is yes.
Obviously, TikTok is kind of a flashpoint now for a lot of this tension that's happening between the US and China, congressional hearings, et cetera. And that world where you could build something that's truly global, you could potentially say might be over, or at least push the pause button on that. How does that impact your own investment philosophy? I know that's part of what led to obviously the split of GGV itself and the creation of Granite Asia. But even in terms of now, the way that you're looking at opportunities and how you're advising founders to think about the world of these cluster economies versus a global economy.
Right. So I think there's a pro and con, right? In everything, there's always an up and like a plus and a minus, right? I think we do have to acknowledge that in the new world that we are embarking on, that the days of kind of one company takes all, one company that's like 80% of market share, it will be harder. Not impossible, but it will be harder. I think we have to recognize that. What that means though, is that when you look at regional economies, that it's possible now today to have multiple players. And that multiple players, for them to be successful, while the model may be the same, right? Like short form video sharing, for example, it may have to have nuances like maybe different languages, different use case, different payment system. And so I think the flip side of this is you will have more players per vertical. They may not be the crazy super unicorn or trillion corn or whatever that's out there. But I think you can still then have innovation on the different level.
Yeah, what does that do for innovation, by the way? I was going to ask you, having the multiple speed boats.
I don't think it's wrong, and I don't think it's bad. Perhaps, today we are all very angst and said, okay, that's it. They're all going to be smaller outcomes. But I think it's also true then with the more customized regional player, you're going to now have more interesting use case, right? The example I gave about how East and West has different monetization means that when you have more startups, leading startups trying to address and build better products for all, you would actually have a better playbook.
Jenny, why are you here in Riyadh? And what do you see in terms of the future of any kind of Asia, Middle East type linkage that could go beyond raising capital from one another?
This is like, I've been coming here for the last 5 years. So it's not my first time here. I think that for me, the world is one map, right? And so what I really like to do is be able to connect markets together, right? As an investor who grew up in my tiny little island called Singapore that has now 5 million population, we call ourselves the little red dot, right? And so part of operating in the little red dot is that you have two choices, right? One, you're happy in your dot, and you could do a lot. It's not too small, it's still okay. The other way is you connect the world. You go out to the world. And so I always felt that other than the big markets out there, right, the East, US, China, big economies out there, actually there are a lot of other economies, right? And Southeast Asia in particular has also very smaller economies. Can you stitch that together? Then the question now is that if we take away the large economies, is there a third region? Is there a fourth region? And can we then stitch that together? And so, but part of that means that I better be there to learn. Just like I can spend 3 years hanging out with very cool entrepreneurs. It's actually very fun. Just hanging out and say, oh my God, I can see this application and all this new application. The same is happening here, right? So I am a novice when it comes to this region, a novice in many other regions. The only way to address this issue is to spend time, right? So that's why I come, not my colleagues. I actually come, I talk to people, I want to talk to entrepreneurs. I was visiting factories. People may be talking at, investors for
with fancy presentations, etc. But you went
factories. I went to look at factories.
What did you? I mean, tell us. What did you see? Like, I'm curious as to your impression. I mean, what do you?
I would say very early impression. Some surprises. I think number one, this region, Saudi in particular, has a lot of resources, right? But because of the richness of the resources, there's also issues that needs to be resolved. For example, you don't have, to be fair, manufacturing-based workforce, right? And so what happens then with manufacturing industries here, you have to automate. Because where else are you going to get the workers, right? And so you have to automate. Now, then what? So the question I have then is where there are resources, that's going to create new issues and challenges, and is there that opportunities for solutions to be found? The solutions could be indigenous, meaning that it's developed here for the market, for the local market. It could also be in the spirit of connecting the dots. Can we bring other technologies, other solutions, other startups who already has matured technology? Can we bring them here so that we can jumpstart, we can speed up that pace of growth? And then I realized, like, given that we are here in Saudi, in Riyadh, that the country has a future factories strategy.
Well, there you go. And you invested in Momenta, right? So, I mean, even like warehousing, AI, etc. I mean,
I think that's when we start to form thesis. I'm doing the same in India. I'm doing the same in like Indonesia, like in all the different markets.
I know you studied in the US. I also did. And, you know, a lot of us then make that decision to move to higher growth markets. And you took a big bet to go to China in the early 2000s. Could you tell us about the journey that you took and how you made that decision to make that leap?
Well, I would say there were a few key decision points in my life. When I was 13 years old, I had a chance to go to New Zealand. It was my first overseas trip for my little red dot. And then I realized there are land where there are more ships than humans. Oh my God, there's a big world out there.
It is beautiful. I've been there as well,
beautiful.
Yeah.
And so I realized that the world is bigger than my own little, island. And so I always aspire to see more of the continents. Literally, I have a map that I tick off and say, oh, I've been there. I've been 6 continents. And so part of going to the US for education is part of that, right? To say that it'd be great. I was, in Singapore, you're educated under the UK system. And so I wanted to try a different education system. And so that's what brought me to the US. I was an engineer. I mean, trained as an engineer. And so I said, I just want to go to a place with lots of snow.
That was your decision factor.
I was like, okay, where are the places with snow? You can see how I make my decision. Of course, East Coast. Of course, Cornell.
Ithaca. Yeah, I've been to Ithaca. That's snow central.
My little essay, and then that's okay, great, I got it. It's so much fun. I didn't come back for 4 years. I was like enjoying all the winter. So I did. That's why I went to Kellogg Northwestern. You see the trend? It's always snow and always cold. Why not, right? I mean, you got to experience all the different temperature type country. So I think that was the second decision, which was to go out, to interact with people from a different part of the world, to have a different type of education system, to even write differently. When you're trained on the UK system, there's a certain way you write your phrases. When you're trained in the US system, there's a different way you write.
There's the right way to write it.
Absolutely. I had my first essay was all marked up in red, and I'm like, I'm gonna fail the class. I'm gonna kick out of school. So okay, but it was great. And then I always wanted. I trained as a engineer, and as I said, I upgrade. I was working on aircraft technology for the first 5 years. And so I was in the Valley, I was in the US, it was the internet bubble. And so that was the time where I felt like where I get my calling is around technology, around entrepreneurship. It's about being able to bring technology and capital to help create something. I wanted to stay in the US, right? But it was then the internet bubble crash, and then 9/11. And then I looked around and I said, where else can I continue to do this? There was only one country at that time. China entered WTO in 2001.
Yeah, perfect timing.
You had 3 IPOs from China in the US market. They were technology, right? One of them was Asia Info, basically helping to to move China telecom infrastructure from 2G or 1G to 2G to 2.5G. So you know that fundamentally the infrastructure is going to change. And they got listed in the US, a Chinese company listed. The second one was Sina. Sina, it's a news portal, much like Yahoo, China company listed in the US. So you knew that something was happening. So I'm like, okay, let's just go to China. So I went to China. I had no friend, no relative. And then you just learn again. So in a way, that was my third decision. You can tell I follow my gut.
Yes, and it fits the VC profile. I mean, it's like you need to be a risk taker.
Yeah, absolutely. And then you do whatever it takes. And then the last part I will talk about is whether it's with entrepreneurs or not, always maintain that immigrant mentality. When you know that you are the outlier, the underdog in any markets, any industry, you will work harder, you will learn more, you will try harder. And those are ingredients that will never go away. It doesn't matter where the world is going to go. Those are traits that you have to have, right? Whether you're an entrepreneur or whether you're an investor. And that's what I tell myself every day.
Imagine, a prospective founder caught you in an elevator and wanted to make that 1-minute pitch. Yeah. What are you looking for in that pitch, in that 1-minute pitch that makes them actually stand out? Okay,
the 1-minute pitch is a misnomer, right? The only thing you can get away from the 1 minute is whether the founder has passion, whether he or she is able to articulate that end vision. And I think that is there enough of that? Sometimes right, when you meet people and you said, okay, whether it's chemistry, whether it's passion, whether it's like this person is special. And so I think that's usually then what I do is, we have a meeting and you can sit down and you really give enough time and effort to understand what the dream and vision is, right? So the 1 minute allows you to say, do I want to spend more time?
Yeah, just a passion kind of, is it the right person to actually spend time with?
Now, if the guy or girl, freeze up, not able to talk, being a leader also it's also a unique capability, right? As a leader, are you able to articulate that vision? Because you're going to have to get people to follow you, right? And so in times of anxiety, can you get it together? I've seen 19-year-old come across, present way better than serial entrepreneurs even, right? And so I think that part of that interaction that you have, it's about people, right? Ultimately, why I said I love animals and robots. Okay, I love people more. It is about that interaction. It is about that reading that vision, that spark. And then the rest is all hard work. It's about underwriting the risk, the due diligence, the pieces that needs to come together before you put in the capital, because we are ultimately steward of capital as well, and you want to make sure that when you do strike, when you write the check, that it is a very irresponsible and very educated decision.
So you've said previously that one of the hallmarks of a good investor is to be able to suspend the disbelief and really look at the opportunity and assess it. Can you tell us about one of the investments where you really had to suspend your disbelief quite a bit and were surprised by the outcome?
I would say there would be many. So as you probably know as well, I love drones, right? Because I used to build drones like 30 years ago. And so one of the startup that came to me initially was trying to do just hobbies drones, which if you think about the 0 to 10, this is like 0.1, right? Because it's easy. There are like a bunch of players that said the technology stack is not that bad. And so it's great. But the thing that caught me when I went to do due diligence was the fact that the founder had like a little lab at the back, and he had like a human-sized transporter drone. And he said, Jenny, this is my dream 10 years down the road. If this works, if I can do this, I generate revenue, I'm going to pour my like savings or the earnings into this longer term vision, which is flying cars, right? Flying planes, autonomous, electric. And that's, sometimes when you see that vision and you say, actually, the technology is there. It is the policy. Getting it to market is about government regulation, but being able to test, making sure that a new technology merge with existing regulation and stuff, right? And so actually, he may think that I invested because it was the commercial promise.
It made sense, but it was actually about the flying.
I invested because of the vision, because I feel like someone has to do it. It's a small check. He has the right technology stack. He has the right vision, and that was quite fun.
So in one of the classes I teach at London Business School on entrepreneurship, we look at this factor, which is things that might not look obvious on the surface. And one of the cases is Airbnb, right? And thinking about the vision of the founders, which now seems obvious. Back in the day, even Brian Chesky has actually a Medium post that shows the 7 letters that he sent to the emails to VCs.
I think we were one of them in the early. My partner was working on this deal. Yes.
If you were actually a recipient of one of his emails, because he said they were trying to raise $150,000 for 10% of Airbnb, which peaked at about 100 billion valuation in the stock market, right? So it was for those, a lot of smart investors said no for different reasons, right? How do we separate the signal from the noise? And it's quite challenging in this type of environment.
No, it's a great question, and as a venture investor, you're going to miss some, right? And so a few things. I think yes, we did. My partners in the US actually had a chance to meet with Brian, went through the business model. And I think at that time, it was harder to imagine because mobile internet was just coming up. And consumers' impression of the phone is, what were you using your smartphone? It's to play games, right? Like, what was the first thing? It's games, right? Like you were playing games, you were doing your Candy Crush, you were doing all that stuff. So it's like, oh, the smartphone is for gaming. And so when you're at the start of that a technology disruption, hindsight is great, right? 2020, you look and say, of course it's obvious. But when you are right in the beginning, it's not that obvious because the network, the network of users were not quite there. Yeah. The applications were not quite there. In this case, for mobile internet, mobile proliferation, the operating systems were also not standardized yet. Today, we're just talking about, iPhone, the iOS, talking about Android, which are the 2 big systems. But right in 2009 and 2010, there were many other operating systems. So now, while today we can structure the whole mobile internet boom and be very systematic, right? Like, okay, now assuming that mobile device is going to be the key go-to device for everybody, and it's going to be the internet, then obviously new models will have to be created because everybody now has a mobile computing device versus just tied to a desktop. But back then, it wasn't obvious, right? Back then, it requires a combination, the ability to understand where the technology evolution is going to go, requires a guess of the adoption rate. Is this going to be 10%, 50%, or 100%? So typically for device adoption, when it hits 40%, it goes into a curve, right? And so
to cross the chasm,
absolutely.
basically.
So it takes a lot. It's asking a lot of the investor.
But what are you doing suspend disbelief in order to get there? What are you doing at Granite, though, to make sure that you're set up in the right way so that you are one of the investors that doesn't pass up on these types of deals and have that insight?
So I think it's a question that we always think about. And as you're aware, the industry, the VC industry is one where the more successful investors tend to then raise larger and larger funds. And then you do larger and larger checks, and you go later.
And more, founders want to go to you. It's a kind of a self-reinforcing circle. Yeah.
No, but what that does is that if you only go up the curve on the later stage, but not maintain your vibe on the earlier stage, you're going to lose that sense. And so at Granite Asia, what we have done over the years is that we have structured our funds into multi-stage different fund products. And while people may be saying, why are you having such a small early stage fund? We actually kept it. We kept, we call it our discovery funds. And our discovery funds allow us to write seed checks, allows us to write, the few 100,000, checks to 2, 3, 4 million so that we are, we continue to stay at the forefront of new technology. You want to be there where the founders feels like maybe like brand new idea, but I want to go to Granite. I want to go to talk to Jenny. I want to just get inputs. And the fact that we have a product that's tailored for them makes this a very, good match. And so that's what we do.
So what would the, this 100,000 or seed stage currently, what types of deals are you looking at? What excites you at the seed level now?
Yeah, so there are a couple of, so where are the alpha bets, right? So recently we wrote a seed check into a company that's doing anti-aging. Right, you and I, everybody else. So obviously, as you look at the world population, many of the countries are like Japan, US, Singapore, right, where I'm from, China. It's the population is aging very quickly. People are living longer, but it's also about like living well, right? And so one of the early check that we have invested is a company that's trying to. They are on a very good path, still very early, but they actually have very good results that shows that they have discovered an anti-molecule that can stop growth.
Wow.
Imagine we all freeze time. We all look like this.
Suspend disbelief.
So the sooner you take it, the better, I guess. Yes. So that's...
You found the fountain of youth, basically.
Yes. I hope so. But this is one of the... You get crazy idea, but obviously a lot of people, there's a lot of researchers coming in. Today, what's interesting is with AI, the time to discovery has shortened. With global kind of CROs, contract research outsourcing for pharmaceutical drugs, the cost to get a drug through clinical trial is also shortened as well. Yes. And so there are various factors that, while I may say it's like a crazy idea, there are fundamental pillars to why it could be interesting, right? So that's one of the more recent crazy idea. I've been doing a lot more around health, around food, because I think that we all understand there's conversations about AI. Obviously, AI is going to be the next internet or next technology. And so we don't look at it as one vertical. We look at this as a horizontal enabler.
Yeah.
Just like we talk about mobile. In the past, we would say mobile internet and internet. Today, all internet is like what? There's no difference.
The technology is really just the technology.
Yeah. So tech itself has to be the underlying enabler. But where the disruption is going to happen is going to be in the verticals. And so I think in areas of health, longevity, fitness, wellness, I think it's one vertical that's really top of mind. The other is about food, right? Because with climate change, crops, duration, farming cycles, it's all changed, right? So so new technology needs to be in place across the technology stack to allow for better food resiliency, supply options, right? And how you store, prepare, and basically create the right food structure is actually very important.
What's something interesting that you've seen in the food technology space?
Yeah, so in the food area, we have over the years made a bunch of investments. We have invested in companies that does 3D printing of plant-based sticks. So
sounds amazing, appetizing.
So if you want your burgers not to be like beef patties but look like steak, well, there are startups that's really leveraging 3D technology to print food. But it's plant-based.
Yes.
Right? And so like that's a very interesting
It's sci-fi
area.
coming to life, basically.
Actually, it's already there. They're selling it already. So I think in that it's a whole range of very interesting technology from traditional food brands, from plant alternative to like leveraging technologies like 3D printing for food. There's another company that uses, since we're on the 3D printing, using 3D printing to print different types of noodles. As kids, we don't like our vegetables. You just want your carbohydrates, right? Yeah. But if you're able to print vegetable into carbohydrates for noodles,
in the noodle.
That's right. So your noodles are gonna come out nice with like a little heart-shaped carrot and broccoli, like color. So for the kids, it's gonna be a great way, right, for a more nutritional meal. So that's what I mean by cross convergence of leveraging different technology to create brand new solutions. And so this is one where you're merging food into, like technology 3D.
So you have, obviously there's all these opportunities, frontier technologies, but at the same time, currently in Southeast Asia, there's a bit of a funding crunch. And in China, there's a bit of challenge economically. If I'm a founder in these markets, right, what advice do you have for those folks that are also thinking big, but also trying to deal with a reality of a market that might not be so lush with cash throwing at these types of investments?
Yeah, so I would say that the days of capital intensive startups probably limited today, right? So if the key success factors to getting a business off the ground is the ability to raise tons of capital, a few $100 million, like billion, I think it's going to be harder, right? So we are in a period, maybe a few years, or maybe next 5 to 10 years, we are actually going to go into a period where efficiency-based model is going to be important, right? So I think one is you got to fix the issue from the internal, which is, can you do better with less? Can you create with less? Can you acquire users without paying for the marketing? That means it's going to ask entrepreneurs or require entrepreneurs to think deeper about the value. Is it real value that you're creating versus value that you can buy, right, with $1 in marketing? So I think that's number one. Number two, the elephant in the room is geopolitics, right? Yeah. It's unfortunate, I'm a lover of technology, but to see sometimes, technology being politicized means that the best founders may not be funded, cannot get funding because of this, right? Or the best technology have to be left on the shelf or in the library or whatever research because they cannot get the right level of financing. So I think so it's really, I think that today the global world needs to have more neutral platforms, neutral regions, neutral capital that can really focus back on supporting these entrepreneurs, supporting great ideas that can change the world, and essentially, protect the entrepreneurs from it, right? So the second thing is the structuring. Yeah. VCs are I always like to say that in the past, I said, VCs were not just investors, we are also psychologists. We have to talk to the wife, the husband. We got to be legal, reading legal terms, and we got to be bankers, helping companies go, prepare for financing IPOs. Now, today I will add, you have to be globally attuned because you have to help the entrepreneurs to figure out where to go.
Yeah, it's like diplomats and Yeah.
So I said, exactly the word diplomat. I was just talking to someone, I said, I never knew that VC have to have acquire that sense of the skills of diplomacy. And today we have to help our entrepreneurs understand what that means so that they can better navigate. But is it possible? Yeah, of course. Yeah.
Another area I wanted to delve into with you, you're a master of raising capital as well. I mean,
I wouldn't say that.
I'd love to learn from you. You have famously raised $2.5 billion over 250 Zoom calls during the height of COVID, right? In a matter of a few months. That's not an easy thing to do. Tell us, how did you do it?
This was COVID-based fundraising. And in that situation, I think there were a few things, right? People could not travel. Obviously, actually, that means more efficiency, right? Because you could have all that phone calls over a short period of time.
Well, it was like $10 million a call, by the way. That's not a bad number.
I was literally working 20 hours.
Wow.
Literally, because I was in Asia at that time, and so you could start your meeting early in the morning because that's when you can get time with investors in New York, right? And then by the time New York goes to sleep, Europe wakes up, and then you have calls with Europe, and then European goes to sleep. And then the West Coast comes, the timing was great. So I would say there is an anomaly. We don't expect to get back to that period. But I think at the end of the day, fundraising has to be tied to our strategy. Has to be tied to what we're trying to do. Has to be tied to the fund, right, and the fund strategy. And so making sure that you have the right investor matched to the right strategy and the product and the region becomes very important. So at the end of the day, if there's one little advice that I can give for fundraising, it's not to wait for the next COVID, obviously, I need my anti-aging drug.
Yes.
But it's really to listen. When we talk to investors, it's about listening to the investors, to our LPs, and understanding whether there's a fit. Right? If there's a fit between what they are trying to invest, what they're interested in, the region, and what they're trying to achieve, and we have the right product, then I think the match will be great. And therefore, that efficiency, that longevity of that relationship will be there because we are a very illiquid long-term asset class, right? And today, that time frame has gone from 10 years to maybe 15 years, right? Because IPO market is delayed. And so it's going to take longer. It's always taken about maybe 8 to 10 years to have a company go from startup to IPO. In the 2021 timeframe, that kind of time to IPO went down to 4 or 5 years. I had a company went public in 3 years. Right?
That's incredible.
That's a bit of
that's an anomaly
as well.
Yeah.
But today, I think as we go forward, we have to be realistic that it's going to take longer. And therefore, having the right fit with our investors means that you have the right trust, and they're not in just for one cycle, that they can be in for multiple cycles down the road. So never expect the past to come back. Always look forward, but just figure out how to address the issues, right? Because every path forward has a different set of challenges.
I'd like to ask you to put yourself in the shoes of maybe some of our viewers who might have amassed, let's say, $10,000, wanting to invest that money. Is there either a company or asset class or space that you would recommend for somebody early on in their career that's interested in maybe taking a bit of a bet to put that money into?
Okay, so I'm not like an investment advisor. And
Understood, yes.
But I'll share my experience.
Sure.
I think that if you're coming into the investing world, the last thing you should do is like take stock advice from folks like myself, who's a private market player long term. But what I did on my own many years back is that I have a genuine interest in business. I want to know what are the pieces of the that makes a business successful. And so when I had a bit of a cash myself during the internet bubble, the one thing I did was I actually read a lot of IPO prospectus, because at that time there was all the .com companies, right? You have like ePads and all the
Webvan.
Webvan. Well, I actually did invest in Webvan, but what that does was like just educating myself, being able to expose broadly to the types of companies that were out there. I think number one is the first step, right? Learning how to read the information that's out there, because companies, if they're public companies, if they are then make sure that you know what are the key drivers and what are the key issues that analysts are talking about. Right? That's number one. Number two, as I said, don't take stock. You have to love the sector. The
space itself, yes, okay.
So I was an early investor, very early in Tesla, because I watched the IPO presentation and I said, this guy is cool. He is trying to create, he's basically saying we are not an automotive company. We are a platform. We are internet company for automotive, right? And then of course I drove my first Tesla and I said, okay, this company is very great. So some of it is the practical aspects, right? The quantitative aspect, going through your numbers, going through the prospectus, understanding the business, asking yourself why now, why this, and why this team, right? For example. And then I think the other aspect to ensuring that you can be an investor in the long term is to always do something that you like. Like if you love it, you're gonna ask more questions than everybody else, right? Because you're like a mini expert. And so the firm that we are in, like at Granite Asia, we organize our team by specialist sector. And I said that don't worry about missing out on the other deal that you never see, a sector that you never track. But in the sector that you track, the sector that you love, you better make sure that you hit the top companies. Right? It's okay to miss. Just don't miss the one that you're supposed to be focused on, right? And for the ones you're focused on, make sure that you're investing in the top few companies, because only the top companies will generate the alpha returns.
So I'd like to talk to you about the Asia tech scene. I remember I did a trip back, I think it was 2017, to Shanghai, Beijing. It was, I think, People Squared. We went to there was a co-working space, yes, and I was actually moderating a panel at the time. And I remember, first of all, we did a tour around and saw some of the tech and the computer vision that was happening at the time. It was fascinating. Mm-hmm. And the story that just comes to mind was the panel. There was a company, representative company there, that was doing genetic sequencing, right? Genome sequencing. Right. And he was saying during this discussion that they can now do it for $100, right? And we're coming from it used to be $1 million bucks, I think, in 2007, and then it was still thousands in the US. And so to add a bit of drama to the panel, I pulled out my wallet and I took the $100 bill. I'm like, okay, let's do this, right? And so after he's like, okay, we're gonna make it happen. After the panel that came around, they took my blood, and then not only did I get the full genome sequencing, there was also an app. It was in Mandarin, but there was a full app to be able to understand it, and all technologies that were not really available to mass market in the US at all. And they didn't even make me pay the $100. So the question is to you, as to say, a lot of the perception from the outside is that there's a lot of copycatting / not real innovation happening in Asia. What's your take as to what is very exciting now and on leading edge that's happening in China and elsewhere in Asia?
So I think that when we look at innovation, it's also very important to define innovation, right? Well, in my view, I think there are two types of innovation. One is the hardcore innovation, right, which is going from 0 to 1, coming out with algorithms, coming out with products, solutions, software that's never been there before.
Radical innovation, you could call it, for instance.
Super disruptive innovation. And then, but that's the second part. And I think the second definition of innovation is essentially business model innovation, operation-driven innovation, the applied type of innovation.
Incremental.
And to be fair, while, when we look at the West and the East is better in applied. Right, because of the market that they are in, because of where they are in their own phase of development, economic phase, it's the incremental innovation, as we talked about, that is changing the lives of many people. In the West, where mature economies are, then obviously, you need to leapfrog because everybody is pretty good, right? And so it's about then going to space, right? It's that reimagining on a different scale. Actually, the world needs both type of innovation, right? And so I think that when you look at Asia today, you will continue to hear more about the applied innovation simply because Asia is not one country. Asia is many countries. Asia has, like we said, aging population, large population in North Asia, but you also have a young emerging population in South Asia, right? Whether it's Indonesia, Malaysia, India. Young population. Then when you look at GDP per capita, the ability to pay for innovation is very different, right? We can talk about Singapore, 80,000 GDP per capita. It's like the top 5 countries worldwide, but it's an anomaly, right? You have the region, India is at less than $2,000-3,000 US dollar GDP per capita. China is closer to the 20,000. So there's a huge range. And because of that, we cannot expect that the only type of innovation that's going to work will be cutting edge. Now, but are there areas? Yes, because when we talk about AI, right, in the world of AI, it's also about access to proprietary data or unique data and huge amount of data. And so in some of those respects, Asia has its uniqueness. We were just talking about longevity, right? Asia biogenome is extremely different from the West. And therefore, if you think of this in technical terms, this is a pretty unique data set. And therefore, the innovation that's going to come from this particular area will be kind of global leading in a way, right? So we really have to break down innovation into different pockets, different verticals, and said there are certain areas where actually the East and the West have to equally innovate and disrupt. But there are other areas where I think, on the margin, if you're talking about transportation change, digitization, gaming. Actually, Asia is pretty good in gaming, right? Because we have young population. so in some of those areas, then you're going to have one better than the other, right? And so I think our job is to not just be too fixated with the whole disruptive and hardcore. At the end, what matters is it going to change lives, right? And localized it.
Let's wrap up with Quickfire. So, one tech gadget you can't live without.
Phone.
Most memorable pitch you've heard in one sentence.
Autonomous. I have one word. You can tell.
The biggest I wish I'd invested in that.
To be fair, we miss ByteDance many times.
Your go-to snack during long investment calls.
Right, coffee, if that's a snack. That's caffeine.
I don't know if that counts as a snack, but we'll
I
count it.
could do 5 cups in a day.
We'll count it. If you could fund actually any startup in history, what startup would that be?
It would be SpaceX.
SpaceX. Amazing. And a book every founder should read.
Nothing on the top of it. I think right now there's no one book. You have to read widely. You have to read everything.
And where should they get their info?
Go online, across the board. I wouldn't want to name media, so but not here, but
broad.
By region, if you can, by different languages, because it's very interesting how different languages and culture take the same article and translate it.
And the next big tech wave will be in?
Robots.
Thank you, Jenny Lee, for joining us on Money Moves.
Great, thank you. Very happy to be here. Thank you.
You heard Jenny's vision about the future of technology. What do you think the next big wave is going to be after AI? Let me know in the comments.